Hi, Dom Netchai here at Prosper Wisely. Just want to provide an update. We've got two big developments, news stories out today. We've got the October payrolls jobs report up 513,000 last month. And then you've got Pfizer came out and announced that their COVID antiviral drug is seeing some really positive results. Something like 90% effective at reducing hospitalizations and deaths. So, in light of that, the markets are up just under 1% across the board in the US. So some really positive momentum there. And then you've got beneath that, kind of at a company level, you've got a little bit of a contrast between, and we've seen this over the last year or so, the kind of pandemic era companies that have benefited and done really well, and then kind of reopen or normalization type companies that benefit when people were able to socialize and get out more. But more on that in a second. I just want to provide just some context or thinking around how I view news and big developments like this. And I group them into short-term effects and short-term thinking and longer-term thinking. And myself, I lean more towards viewing things through a longer-term lens. So, what does that mean in this case? We've been talking about Federal Reserve, interest rate policy. I think if you continue to see news like this over the next few months, the Fed is going to be forced to act faster than they wanted to on interest rate policy, meaning rates are going to rise faster than maybe many of us expect, or certainly on the Federal Reserve level, if they're forced to move in a way that they weren't thinking. And what that means for the markets is, so as they unwind all of that help and support that they've been providing in the economy, you're going to see some market volatility in the stock market, go through a tougher period. But the flip side to that, I think ultimately, if you have a strong economy at a fundamental level, that's a good thing. I don't necessarily think we should be wanting Federal Reserve support forever, but obviously there's an adjustment period, and I think you just got to be prepared for that. And then going back to the idea around these individual companies and kind of their reactions to these developments is you've got companies like Zoom, which is like video conferencing, and Peloton that have all done really well in this pandemic era. And then on the other side of that, reopen normalization, you've got companies like Live Nation Entertainment, Expedia, Travel, all doing really well, up 10-15% today. So really strong moves. Flip side, those pandemic era companies not doing so well. So it's just interesting to see the different trends happening kind of in a real-time way. And lastly, so I definitely pay attention to, I pay attention to the short-term trends and kind of hype and frenzy, but I don't put too much weight on from a important decision-making standpoint. I think and the reason I pay attention is because short-term trends can turn into longer-term trends. So you're just going to keep your eye on it and evaluate them, study them as you go. So hopefully that's been helpful. You guys take care.